The account mix factor of a credit score only accounts for 10% towards the overall score. Account mix can only contribute up to 55 total points, versus payment history, which can contribute up to a whopping 192 points. Let's get into how consumers can max out the account mix's contribution to a credit score when starting out in their credit journey or rebuilding credit. I'm Cap, and welcome to Screaming Lincoln's Consumer Credit Series. There are only two types of credit accounts that comprise the account mix factor of a score. First, there are revolving accounts. Second, there are installment accounts. Revolving accounts are any type of credit that can be reused over and over, meaning the balance can go up and down over time depending on how much is charged and paid each period. Any type of credit card, line of credit, or overdraft account is considered a revolving account. Installment accounts are any type of loan. Balances are meant to go in one direction only on installment accounts. They have less flexibility when it comes to payments and balance volatility, which means their terms are spelled out, and borrowers must adhere to those terms by making fixed payments every period until the balance is zeroed out and closed. Installment accounts have a lot more structure to them and don't have much changes to their terms like revolving accounts can have. Once an installment account is reduced to a zero balance, it's usually considered closed, unlike revolving accounts, which stay open.
Okay, so I open one credit card and take out a small loan, and I'm done with this account mix stuff for my credit score, right?
No, it's not that simple.
Come on with the come on already. It's never simple with this credit stuff.
It's not that difficult either. If your only concern is improving your credit score, then the formula is simple. Open one installment account and at least 3 revolving accounts. However, I prefer as many as possible.
Come on, bro. I don't have a credit history yet. No lender is just handing out new accounts like that. Or are they?
Satisfying the installment account requirement is easy if you use a credit builder loan. No credit history is required to get one. Most bigger commercial banks will not offer this type of installment account product because there's not enough money to be made. Smaller regional banks and credit unions are usually a better option to obtain a credit builder loan. Financial tech startups have also gotten into the lending game and now offer loan products that compete with the larger traditional commercial banks. As we get further into the 2020 decade, expect to see more of these consumer-friendly online banks or fintech startups offer credit products that are just as good, if not better, than the bigger banks. Just don't forget to review the terms of the loan. Look for words like origination fees, prepayment penalty, and of course, the interest rate to see what it actually costs to acquire a loan which satisfies the installment account portion of the account mix factor of a credit score. There are payment strategies that can be used to minimize the out-of-pocket costs borrowers pay to obtain a loan. One tactic used by savvy consumers is called the secured loan technique, which minimizes the interest a borrower pays to get a loan reporting in their credit history for less than a single penny per $100 borrowed. If you'd like to see a video or have a question covering the secured loan technique or any of the fees to look for in a loan, just let me know in the comments. That takes care of the installment account requirement. Now, revolving accounts can be a little more difficult, or possibly much easier. The two mainstays for having the least strict approval requirements are Capital One's Platinum Card and the Discover It Secured Card as of 2020. If there were an annual credit awards show that had an easiest to get approved for category, these two would always be in the running every year. Back when I started, I was successful in opening 2 out of 3 retail store cards while I was just a teenager. Credit rules have changed since then, but if you can prove income, then obtaining a credit card is very possible for teenagers in the 2020 decade. Many lenders have more lax credit requirements once you declare income on an application. If I were starting over now, I wouldn't be afraid to apply to smaller, lesser used cards from stores like gas stations, grocery stores, automobile service stations, and of course, retail stores. Don't expect to get a huge credit line, low interest rate, or huge sign-up bonus. Remember, the goal is to build a credit profile first. Obtaining more accounts is the first step. Obtaining the right mix of accounts is the primary focus of this video for those new to credit or rebuilding their credit. Don't forget to try your bank where you have a checking or savings account. Smaller banks and credit unions are known to have less stringent approval conditions than bigger commercial banks like Bank of America, Chase, and so on. Don't overlook the smaller institutions out there when starting your credit journey, as the bigger lenders usually have higher credit score requirements to open credit accounts, especially if you're trying to open a premium credit card. One last option for revolving accounts that can be the easiest to appear in your credit history and contribute significantly to an increased score is the Authorized User method, or piggybacking as it's referred by credit experts. I also have a video that takes an in-depth look at being added as an authorized user. Piggybacking as an authorized user can push a score well into the 700s, provided all the ideal conditions are met with the card. Again, these options for installment and revolving accounts are strictly in the context of increasing a score for anyone starting their journey or rebuilding their credit. It's important to note that having an 800 credit score does not guarantee an approval. I just got denied, and the lender even acknowledged my 800 plus credit score in their rejection letter. In my experience, having a score of 760 is treated no differently than having a perfect 850 score. If I were starting out in my credit journey, the first thing I'm doing is getting my score to that mid 700 range. I'm doing this by piggybacking to a responsible primary account holder's card as an authorized user. If I could do this with 2 or 3 cards, and those cards had the right conditions, then I'd leverage those additional cards by piggybacking onto them as well. But maybe I don't have access to a responsible credit user account. No problem. We'll get back to opening cards in a moment. Next, I'm opening a credit builder loan by typing credit builder loan near me into an online search to find a lender that offers this. Remember, bigger commercial banks have the luxury of being picky in who they give credit to. Smaller banks and credit unions are much friendlier to consumers with little to no credit history. But if you're as lazy as I am when it comes to this stuff, SelfLender, which recently changed its name to just Self, offers a great online credit builder loan that can be opened without a prior credit history or even any income. I have a video going over this option. Minor changes have been made to SelfLender's account terms, but check the video description for changes, as most haven't had much effect on my perspective of SelfLender as a great option for starting or rebuilding credit. Getting back to opening cards, my next strategy is to open at least one card, preferably several, as a primary account holder, meaning the card is in my name only. I've never advocated becoming a joint owner on any account because of the liabilities that come with it. But if you could convince someone with an excellent score to co-sign on a credit card, then the upside is all yours, and the liability is shifted more to the co-signer because they stand to lose the most with a possible drop in score. What stinks about joint ownership is that the credit product's life is terminated once the co-signer is removed from the account. So using a co-signer to get a running start in credit only goes so far, unless you can convince the co-signer to keep the account open. Closing accounts has a negative effect on scores. See my video on Age of Accounts to learn more on what to do in this situation. Moving on from joint ownership, let's look at some friendlier credit cards for those new to credit. The Capital One and Discover products mentioned earlier are great when starting out. Some applicants may have success with a smaller bank or credit union in their area, especially if the applicant already has an existing relationship like a checking or savings account open with the bank. Banks love being able to see borrowers' deposit history. It can really help with approval odds with some smaller lenders. Don't be afraid to walk into your bank and inform a banker that you'd like to open a credit card to establish a credit history. Many bankers know consumers are aware of the importance of building a solid credit history. Just tell the banker you'd like to open a revolving account like a credit card or overdraft account. Always review the terms and look for the fees, if any, especially for overdraft accounts. In fact, it's uncommon to see lenders offering overdraft protection without the borrower incurring some type of outrageous transfer fee, which can go as high as $35 per transaction. I was lucky when I found a credit union years ago that gave me an overdraft account which had no fees whatsoever and only charged a nominal 8% annual interest rate, which would usually only cost me $1 in interest to use a couple $100 until I got paid the following week and brought my account back above zero. It's important to review the account terms, specifically the fees, which are required to be laid out in an easy-to-read format. This is usually presented in a box-type format called the Schumer box, named after New York Congressman Chuck Schumer. Always look at the fees. In particular, look for any ancillary fees like annual fees in the case of credit cards or transfer fees in the case of overdraft accounts. Most lenders impose a minimum interest charge. If everything looks good, inform the banker you'd like to open an account. This can be done online as well, but some smaller banks won't have as friendly of an interface, as some are just slower at updating their website and tech services. Ever try using a tiny bank or a credit union's mobile app? Some are night and day differences when compared to the bigger commercial banks' mobile apps. Just remember the trade-off. You may be getting access to a credit product that bigger banks wouldn't offer in exchange for something more clunky or unfriendly, like a mobile app that doesn't offer a peer-to-peer payment service like Zelle. In summary, the goal is to build a credit profile to diversify the account mix factor of a credit score. In the beginning of a credit journey, it's not about having an ultra-low interest rate or a flashy metallic card with premium travel benefits or a huge sign-up bonus. All that stuff will come with time. Prove yourself worthy by building your credit history with at least one installment account or loan, then have at least several revolving accounts or credit cards to go with it. There are activity and payment strategies that must be applied to leverage those accounts to improve a credit score faster, which I go over in my video on payment history. Keep in mind that credit continues to evolve. Fintechs have disrupted the lending industry and continue to provide innovative services that force the larger traditional banks to evolve with. It's important to have a strategy in this credit game and change your play accordingly. If you have any questions on the account mix factor or anything involving credit, hit me up in the comments anytime. What are you waiting for? Hit it, Steve.